Now, Google's expected to have slowed growth, which means that it's not going to be growing as fast as it used to be. But at the end of the day, analysts predict that Google will end the year still taking about 30% of the digital ad market for the entire world. Amazon, a little bit smaller of a business, but it's expected to grow faster simply because it's just not as mature.
And Julia, what jumped out to you about Facebook last night, which, again, it just showed the business continues to execute despite all of the headwinds it's facing?
That's absolutely right. Facebook growing its revenue faster than expected. But what I thought was so interesting, Kelly, was during the earnings call last night, there was a moment where the stock turned around. It had been higher and it reversed and went into the red. And that's when CFO David Wayner warned that they expect revenue to have a pronounced deceleration in the fourth quarter and going into 2020. And he said that's because of uncertainties around ad targeting. So I do think that Facebook's not entirely out of the woods yet, and they don't entirely know just yet how some of these changes, both in terms of a regulatory standpoint and also in terms of consumer behavior around privacy, are going to impact their ad business.
Which, Sarah, raises the larger question, is their efficacy driven by the very practices that regulators are trying to crack down on?
Yeah, it's going to be a huge impact on their business. I mean, to Julia's point, one of the things that they were saying around privacy, they've been saying forever to expect newsfeed revenue to decelerate just because they're saturated, which is a good problem to have. This is completely different. This is them saying we might not have as many options for advertisers to target their users, which means that they might go elsewhere to a rival platform like a Google or maybe even a TikTok or a Snapchat. That is what investors should be worried about, and that's why you probably started to see that stock go into the red.
Or maybe they're happy to say, kind of worry investors a little bit for the sake of getting regulators off their back. If they say, look, there are other platforms and places you can go. I want to compare and contrast this, Julia, for a moment to what we're hearing from kind of the legacy media world. We got Comcast numbers this morning. We got AT&T yesterday. They're showing a lot of video subscriber losses still. Are they going to try to evolve to catch up and match what the tech giants can do? Or are they going to try to say we offer something different and people are going to see our value longer term?
I think what we've heard from Comcast and AT&T is that they are losing video subscribers, but that's not the metric they want to be measured on anymore. They want to be measured on different things. For Comcast, it's really about their broadband relationships and their overall number of relationships with consumers. And Comcast says that they're very enthusiastic about the potential for their direct-to-consumer streaming service, set to launch in April, to really benefit from everything they have, which is the premium content and also those consumer relationships, without counting too much just on those video numbers, which are going to be shrinking.